Michael Saylor and MicroStrategy have just dropped another bomb on all of us in the crypto industry. So now they are selling a lot more Bitcoin. They're selling up to $1.2 billion worth of Bitcoin, roughly. So they just came out with this new filing. I'll kind of go through it, a few of the key points. There's kind of 5 key points, and I'll keep this very brief, of what MicroStrategy and Michael Saylor are saying that they're going to do here. So we'll run through kind of these 5 key points, and what it actually means, for MicroStrategy, for the industry, et cetera. So first of all, the board approved a USD reserve policy. So they approved a USD reserve policy asking for $2.55 billion in reserves. And these reserves are specifically for funding dividend payments. So obviously for Stretch being their kind of core product, they need to have runway for these dividends. That's kind of like the big issue, if you will, with MicroStrategy right now is they've got this massive, dividend crisis in terms of, over $1 billion a year worth of dividend obligations for Stretch. And people are wondering, where's that money going to come from effectively? So they've got this reserve policy that they've just installed, which is $2.55 billion, and it covers 17.4 months worth of dividends. So a decent runway, not the best runway, but as we all know in crypto, a lot can change in 18 months. So it could be just enough runway for MicroStrategy and Michael Saylor to kind of pull out of this. We'll have to see. Really what they're waiting for is the Bitcoin price to go up. And I'll kind of run through this first, and then I'll give you my thoughts on it, in more complete depth. Second major point is that the revised STRC dividend policy, the effectively they can change the dividend rate whenever they want. They increase the dividend rate by 50 basis points. So it was 11.5%. Now it's 12%, is the APR, annual yield of holding Stretch, in terms of dividend rate. So they increase the dividends, which are supposedly supposed to make, buyer demand go up. So Stretch price should go up from that. And they continue to increase it, by the way. So I wouldn't be surprised if this starts creeping up even more. They added a digital credits securities repurchase program, which is effectively, sorry, let me scroll here. This repurchasing program is $1 billion authorized effectively for them to go out and buy back their different preferred stocks, ranging from Stretch to Stride and some of the other ones, like Strife. And I don't think this is the best move. I mean, again, we'll kind of get into that later. I don't think that's the best move for strategy. And then the other thing in here is the MSTR repurchase program. So I actually think this is a better path than repurchasing the preferred shares, and I'll get into that as well. But they've got a program in here for $1 billion of repurchasing MicroStrategy stock. Obviously, kind of an interesting thing to throw in here because they're selling, unprecedented amounts of MSTR. So that's how they're really fueling the capital raise lately. So they're obviously not selling Stretch. It's not at the peg, so they can't sell any. So in order to get any new capital, they're going to the MSTR ATM at the market, is what they call it, where they sell MSTR stock to the market, and that's how they're raising capital right now. So kind of interesting to slide this in here after all the recent sales. But again, like buying it at some point, I think is a good idea. I'll get more into that in a little bit. And then they've got the BTC monetization program. So this is a fancy way of saying that they are going to continue to sell Bitcoin. They sold 32 Bitcoin, a couple weeks ago. Obviously, that's not a very large amount of Bitcoin. But what they were really signaling, I think, is there were probably behind the scenes discussions. People on the board were saying, hey, would you ever sell Bitcoin in order to do stuff? And Michael Saylor has very publicly said that he would never sell Bitcoin. So I think that they kind of pressured him to say, well, I said I'd never sell Bitcoin, but if I really had to, I would. And then they said, okay, well, you really have to, so sell some. And then he sold 32 Bitcoin to prove that he could and that he would. So I think that's ultimately what happened. If you go back a couple of videos, you'll see me talking about that. So I think that's what's really making the headlines here is, they're going to potentially sell up to $1.25 billion worth of Bitcoin. And that would go straight into their USD reserves, which then is obviously what they use to fuel the dividend payments. Under most scenarios, that's not a big deal. Like if you're selling, I actually think that's a good long-term strategy for strategy is, eventually, if you've got this, $1.5 billion a year in dividend obligation, through Stretch and other products, you have to get capital from somewhere to pay these dividends, whether it's today or 5 years from now. And the question is, where is that money going to come from, right? And I think one of the big question marks over MicroStrategy has always been around, where are they going to get the money to pay the dividends? Well, selling Bitcoin is definitely a good strategy when Bitcoin is higher than your cost basis. So MicroStrategy's cost basis, I believe, is like $76,000. And obviously Bitcoin's trading at 60K right now. So they're down about $13 billion in paper losses. Selling Bitcoin here to pay dividends is not the best strategy. If they have to do it, that needs to be like their last resort. And this is going to get into where I think MicroStrategy and Michael Saylor should go from here. They're sitting on a stack of 50, the current stack is 850,000 Bitcoin. Say that 3 times fast. And that is worth roughly $50 billion. So if you do the math on that, 5% of 50 billion is $2.5 billion. So what I think MicroStrategy and Michael Saylor should do is, well, you've got this, more than $1 billion dividend cost per year, but you're holding all of this Bitcoin, supposedly. And I say supposedly in kind of a sarcastic way, but they are holding it in custodian accounts, which, if you know anything about me or what I do with Leo Dex, I prefer self-custody and your own wallet. But anyways, they are holding $50 billion worth of Bitcoin. So why not take that $50 billion worth of Bitcoin and put it into, various protocols and custodians that will pay you yield on it? And I'm not saying to put in any single custodian, any single DeFi protocol. I'm not saying to put, all of it in one protocol. I'm not saying to, trust that and just, throw up your hands and throw it in the vault and start earning yield. Anyone who's done that, anyone who's used these yield protocols knows there's a lot of risk. If you remember things like BlockFi, if you remember things, all sorts of things, Terra Luna. I mean, there are endless examples in crypto where earning yield on your crypto shows that it is not a no risk thing to do. That being said, Michael Saylor loves to use ChatGPT to make these products like Stretch. So if he were to say go back to ChatGPT, and obviously I'm half kidding here, go back to ChatGPT and come up with a new plan and a new strategy. What I would do if I were him is I would come up with a plan and strategy to deploy that $50 billion worth of capital into something that will pay them yield, because there are plenty of Bitcoin yield products out there. And I think 5% is relatively conservative. Like, I think you could easily get 5% yield on all that Bitcoin by having some sort of diverse basket of places where you park it for the yield. That is how money really works in the real world. So they have so much capital in Bitcoin that I think this is a no-brainer to do. If they start earning yield on that full 50 billion and they start earning 5%, they will cover their dividend rate and their dividend runway. And I think that MSTR would go up as a result. Bitcoin also would probably go up as a result, because right now this is kind of this hanging, like guillotine over the head of Bitcoin, where a lot of people in the fintech and financial space are worried about Michael Saylor. They're worried about strategy, obviously dumping all this Bitcoin on the market. So that suppresses the price of Bitcoin, which ultimately hurts MicroStrategy even more. So all of these factors just lead back to me thinking, why not take this Bitcoin, start earning some yield on it? At the very least, make the dividend obligations less, hard on the company by having some capital come in. And then while you're working on that, because I think that honestly, I don't think that would take that long to deploy that strategy. I think within a month, they could probably deploy the majority of $50 billion. Maybe don't deploy the full 50 billion. Maybe deploy, 50 to 75% of it. Keep some in like liquid reserves that aren't being lent out. And I think that would be a great strategy. While you're doing that, or what I would do is after you do that, because really you're setting that up, then you're just sitting back and collecting your 5%. After that, I would set up some sort of revenue generating products. So really what strategy is missing is they've never had any revenue generating products. They have revenue accreting products to investors, which means they have products like Stretch that pay investors to hold them, which is actually negative cash flow for strategy. So imagine that strategy deploys, a lion's share of their $50 billion worth of Bitcoin. They start earning yield on it. Simultaneously, they start building actual Bitcoin financial products, which there are other examples of people trying to do this. Who's it? Jack Mallers is trying to do this as well with his own company. So creating financial products, creating financial services around Bitcoin. Michael Saylor has the brand, Strategy has the brand. Go out and start creating some real products and real services that people use and pay you for, and combine that with earning yield on your $50 billion worth of Bitcoin. And you will not only cover all your dividend obligations, you will cover all your operating expenses. You will also have leftover capital, in my opinion. You'll have positive revenue. And then you can use that positive revenue to buy more Bitcoin, put it on your balance sheet. And now you not only have all the flywheels of Stretch and everything else, you've also got the flywheels of positive cash flow, which the positive cash flow flywheel is the strongest one in every industry. You can look at any company. Having positive cash flow to reinvest in your core business, which for Strategy is buying Bitcoin, is absolutely a no-brainer. It is the best thing that they could do for the company. So that's my opinion. That's what I would do if I was Michael Saylor and in his shoes. Obviously, there's a lot of nuance here, a lot of people to answer to, a lot of money at stake. So what I think is important and what he thinks is important is obviously going to be two different things. That's just my take. That's how I would fix Strategy if it were me. If it were you, what would you do? Would you do the same thing I'm proposing, or would you kind of stick to the Stretch model and the dividend model that Michael Saylor is going with here? Let me know in the comments.